Good day, fellow investors. 6 months ago, I made a detailed analysis on Intel, and after that I got hundreds of emails about Intel, the risk, the investing, and now 6 months later that Intel did a lot of things in between, it's a great moment to discuss the risk and reward with investing, the fear and exuberance, and how it impacts the stock, how opportunities are created, business dynamics, investing in the unknown based on a margin of safety, and how I like those investments where worst case scenario I'm okay, the upside is to the moon, limitless. So that's why I invested in Intel back in September, and there is a lot to share and learn when it comes to this situation. So if you enjoyed the video, please click that like button. So Intel was in a pickle, especially in September, October. I bought in September, then it crashed even more in October. Apple was coming with chips, ADM is growing faster, taking market share. So a lot of bad things, delays in production for Intel, a lot of negative sentiment and a lot of bad things. However, I was comparing this to the price-earnings ratio, the cash flows. It was about 10% free cash flow yield, stable cash flow yield, huge investments in research and development, and then it's a business, and a business changes over time, takes advantage of the opportunity, and continues to grow. And you can see here, okay, exuberance, but Intel is a compounder and has been growing slow and steady over time, and when you see those trends, there are always bad periods. And you have to see whether it's the temporary bad period or a long-term secular issue. And I was looking at Intel and I was looking at the positive tailwinds because demand for chips, as we discussed yesterday with the Tesla example, if everybody goes autonomous, data and all, the world will need a whole lot of chips. And if the world will need a whole lot of chips, then the world will need Intel too, because you can't rely that all your production is in Taiwan. If China does something in Taiwan, then Tesla and a lot of chips and the whole world is, let's say, stopped, not by the virus, but by undersupply of chips. So Intel is in a great position there because it covers 15% of the market and has production which is not all in China or Taiwan. Plus, they are investing a lot, they have huge cash flows, with 15 billion of free cash flows that they pay dividends and make buybacks at low prices to increase value. And I said that it reminded me of Apple because products are being sold. Intel is such a big company that it has its position in the market. The market is growing extremely fast, and yes, there are competitors coming in, but it's unlikely that it will go bankrupt in the next 5-10 years. It's unlikely that it will not be profitable. Yes, perhaps cash flows will deteriorate for a few years, but with the investments, with everything, with the position, it reminded me of Apple in 2016, where everybody was looking at the stop in growth, the competitors, the Samsung, the everyone, but nobody looked at what's already there and the cash flows there. Of course, you know what happened to Apple. And now they have really changed, and that's what I like about businesses. Businesses change. They have hired a new CEO, the entire world is becoming digital, and they have changed the way they are working, and they are, again, trying to take advantage of what's going on with the capacities they have. So at scale manufacturing, incorporating not just chips but also packaging that other companies like TMSC, that we also did a video, you can check that, I'll put it in the links below, don't have collaboration with a lot of big companies, and now they started investing in Arizona with Intel, with incentives from Biden, so with incentives to keep production in the US, because now it's also a political issue, not just a profitable issue. And if you just look at Taiwan Semiconductors, the stock exploded, but the market cap is 500 billion. Intel's market cap is half of that. Intel is more profitable, has higher cash flows, but the market is exuberant and it likes this exuberance. However, it's business, it's dynamics, and it's risky to be in an exuberant position. It's better to be in a margin of safety position where worst case scenario you are okay and then the upside is free. So investing is about risk and reward for me, and you can find exposures to all great trends but with low risk. That's what I'm seeking. And you can see here now Intel, that has the capacity, that has the cash flows, is challenging TSMC and Apple and Qualcomm, and we'll see whether they'll build again their chips as they can do it. So they are taking advantage of that. On the other side, I have received many emails from people who work in the space about the fate of General Electric for Intel, AMD data center competition, taking away long-term revenues, and that Intel is big, the competition is nibble and small. And this is an email that summarizes what I got from a lot of engineers that are looking at the space and telling me Intel is gone, Intel is destroyed. And this is exactly why Intel has been cheap, because nobody looks at an investment from a perspective, okay, what's the worst case scenario? Will the cash flows cover my investment? Will I do okay in the worst case scenario? Everybody's looking, oh, this company is growing 50%, this company is not growing, Intel, so this is so much better, because the market has been focused on growth. And now Intel might grow too, as it's a business, it's big, it moves slowly, but when it moves with 20 billions invested in Arizona to compete with other producers. So you can choose Taiwanese, Chinese influence, or you can go American. A lot of companies will simply go American, and also it will produce also for competitors. So the ecosystem is there, a lot of value, not even speaking, you can check my Intel video, not even speaking about all the other opportunities there. And this was my fundamental analysis. Intel, 15 billion of cash flows, just 4% growth rate, just lower than what the market will be growing. Terminal multiple on the cash flows, on the buybacks and on the dividends that they are doing with the cash flow, so I include them here. And my evaluation for Intel was 235 billion. In the better case scenario, and this growth rate might be even faster given what's going on with the environment, TSMC expects 15% growth over the next 15 years. So if I change that really changes Intel's valuation, and if the market gets exuberant, so that is really crazy upside for Intel. But you have seen what has happened to Taiwan Semiconductors. So this is the potential, this is the total risk, no growth, bad terminal multiple on very low cash flows from what is possible. But then business is also dynamics. This can happen in a year, 2 years, but then the company can invent something new. It's a very interesting business, but the key is that the tailwinds are there from huge demand growth. So this is investing for me, risk and reward. My job is to understand the whole picture, not just one piece of the puzzle, which often weighs on the complete market situation. We've seen that with Apple, with Intel. My job is to put everything into a perspective, see what is the risk and reward, see what's the margin of safety, the cash flows. Worst case scenario, Intel can sell itself for 200 billion. Worst case scenario, there would be buyers. So that's investing, low risk, high reward. That's what we do on this channel. So if you like that, please subscribe.